Hey, welcome back everyone. This is Uncle Frank, and I am not a financial advisor, nor is any of the content to be construed as financial advice. This channel is for entertainment purposes only. Okay, let's start this one off with GameStop. We got some news today. GameStop announces collaboration with PSA. GameStop to offer trading cards, authentication services in new collaboration. GameStop becomes an authorized dealer of sports and hobby trading cards. But the street didn't give a shit. Pre-market, GME started at $21.99, got to a low of $20.98, finished the day at $21.27, losing 6 cents or 0.28%. But what I think is important about sports and trading cards is if they plan to hide a Bitcoin in the packs of trading cards. That's going to be popular. I think that kind of stuff is going to work for GME. And then late in the day, this caught my eye. Looking into GameStop's recent short interest. GME's short percent of float has risen 4.38% since its last report. The company recently reported that it has 38.13 million shares sold short, which is 10.24% of all regular shares that are available for trading. Based on its trading volume, it would take traders 2.81 days to cover their short positions on average. Now, I don't trust Benzinga or those numbers, so I went poking around. Chart Exchange has data as of September 30th. They have short interest heading higher as the chart depicts, and a short interest reading of 8.99%. But Fintel.io has more up-to-date information feeds, and they have short interest at 9.33% and the short interest ratio at 8.67 days to cover. So no matter who you trust, I like what I see. Short interest climbing again and the days to cover elevated. FTDs are heading up again. Cost to borrow remains low, but when I check short position change, there seemed to be a lot of short covering in late May, but the short position has increased over the past two readings. Institutional investors own about 27.6% of GameStop's outstanding shares, with the largest shareholder being RC Ventures, meaning Ryan Cohen. Having said that, institutional ownership is heading in the right direction. Okay, so what's the bottom line on GME for Uncle Frank? I'm long at 20.63. I'm waiting for Ryan to make the big announcement like everybody else. He's either going to start a new business, buy a new business, or both. After all, he has over $4 billion. Will he make any announcement before or after the election? I say after, and that's where I'm at. What am I concerned about? I have this nagging feeling the SEC or FINRA or both may have gotten to Ryan or even Keith Gill. They both have cases or investigations against them, and you don't have to do anything wrong for Wall Street or the government to come after you. You just have to hurt their wallets. So my chief concern is, will Wall Street get the big news before we do and be prepared for it instead of being surprised? And here's the tweet from today. Get your cards PSA graded with GameStop now. Let's see where it leads. And for my Archer aviation fans, we got two positive articles the same day from the Motley Fool. History says small cap growth stocks could soar. Here are two to buy now. Small caps typically outperform at the start of new bull markets, except the current one. It's time to go hunting for small caps that could explode in value over the next decade. SoundHound AI and Archer Aviation are two promising investments that could deliver. And then again, three no-brainer EV stocks to buy with $1,000 right now. NIO's business is stabilizing and its deliveries are accelerating again. Rivian could impress investors once it overcomes its growing pains. And Archer seems like a promising play on the eVTOL aircraft market. Archer finished at $3.11, up 3 cents, or 0.97%. AMC did make it into a Zacks article today under the heading Stocks Poised to Beat Earnings Estimates, pointing to our next earnings call in November. AMC has an earnings ESP of a positive 84% and a Zacks rank of 2 at present. AMC is expected to register a 33.3% increase in earnings for the to-be reported quarter. It reported better than expected earnings in 2 of the trailing 4 quarters and missed twice, the average negative surprise being 69.5%. Don't forget the earnings show continues tomorrow, Wednesday the 16th, with Morgan Stanley and U.S. Bank before the bell. Then Thursday, Blackstone before the open and Netflix after the close. And on Friday, PG, AXP, and Ally, all before the open. Hey, I want to thank you for watching, and please remember to hit the like button after this slide if you enjoyed the presentation. Subscribe to the channel and set the alert so you're notified when I have new information to share. See you at the bell.